In this video, we'll be discussing the 5 most common trading mistakes that I see traders making in the trading space, whether they trade FX, crypto, commodities, indices, whatever you trade. This is a pretty common list. And for you at home, I hope that by going through this list, you can maybe compartmentalize which ones you're doing well on and maybe some things that you could improve to help you get over that hurdle to get to becoming the profitable trader that you want to be. Let's jump in. Trading futures might sound complicated, but everyone starts somewhere. And with this video sponsor Plus 500, you can trade everything from the S&P 500, the NASDAQ, Bitcoin, natural gas, Forex, metals, crypto, and more, all in one place. Their platform is simple to use, intuitive, and it's mobile friendly as well. So you can trade from anywhere on the go. And with Plus 500, you can start trading with as little as $100. And if you don't want to risk a thing, then guess what? They offer some free demo accounts. These are risk-free accounts that you can actually practice your skills before going live. And these demo accounts behave like real ones, but there's no real money on the line, and you can practice before deciding if you'd like to go live. And with over 30 million global customers and 20 years experience, Plus 500 is not new to this game. They're a well-trusted gateway to the futures market and have many years of experience working with traders all around the world. And to help you get started, Plus 500 is offering a welcome bonus of up to $200 in commission-free trading. So if you'd like to explore all the great features with Plus 500, click on the link in the description below to open your free account. Remember that trading in futures involves the risk of loss and is not suitable for everyone. Not all applicants will qualify. And thank you to Plus 500 for sponsoring this video. The first super common trading mistake that I see new traders doing is over trading. Many times people think that by being a trader, they need to be placing trades all the time. It kind of feels right to be placing positions each day and speculating on where the market's going to go this morning or where it's going in the afternoon and wanting to be constantly in the markets. It does seem intuitively the right thing to be doing to place trades and to capture moves as they're happening all the time. But what I found in my own trading is that less is more. Placing high quality setups when they form on my charts and sticking to my rule sets religiously to make sure that the positions that I'm in are ones that I'm supposed to be taking is more important than making sure that I'm always kind of in a move or capturing the next big trade. I think it's actually perfectly fine to sit on your hands, and having no trade is a position that you can technically be in as a trader. By not placing trades, that is still taking a quote unquote position simply by remaining neutral. The second most common trading mistake that I see in the trading space is not having a trading plan. And this one is a shocker to me, but many traders have heard the old adage of treat your trading like a business, yet many traders fail to create a business plan, or in this case, a trading plan. If you're planning on being a profitable trader, you can't fail to prepare in the first place. And trading, like a good business, requires a strategy that you plan on sticking to through thick and thin, whether things are going well or things are going poorly. Your plan, if you have one, will hold you within a framework. It will give you guardrails to what you're doing. But having no trading plan and just trading based on your emotions or your gut feeling as things are going past you is a really dangerous recipe for disaster, in my personal view, when it comes to trading. Having a trading plan is critical to building longevity in what you're doing as a trader. The third most common trading mistake that I see happening again and again in the trading space is people neglecting risk management. Now, first, let's define what I mean by risk management. Many traders have heard the old expression, something like, hey, you should only be trading and risking 1% per trade. That's something you commonly hear in the trading space. But what I mean by risk management is not simply a blanket statement rule like that, but rather the general idea that adhering and paying attention to your drawdowns and in your back testing, which we'll get to in a second, little foreshadowing there, you should be accounting for what is a normal drawdown in your trading, and also knowing what position sizes are appropriate for your trading approach. And also, are you diversifying across a list of different things that you're looking to trade? And if you're using a stop loss, how are you managing that stop loss to protect your account in the event that you're wrong about an idea? What I see so common is that traders focus on offense rather than defense in their trading. Specifically, they focus on how much can I make from this trade rather than What am I going to do if I'm wrong about this trade? And in my view, it is way more important to focus on the latter. What are you going to do if you're wrong? Playing defense in trading is the key to long-term survival and enduring those drawdowns that are inevitable even for the greatest traders on planet Earth. Number 4 is a big one that a lot of traders struggle with, and this is emotional trading. If you find yourself constantly worrying, checking your phone, and feeling like every movement in the market is a personal attack, you're probably risking too much per trade, but also emotional trading has gotten the best of you. And don't worry, you're not alone. Many traders, myself included, have fallen victim to this concept of wanting to get our money back from the markets, revenge trading, emotional trading that is, kind of all this flurry of emotions at once. It is actually kind of normal to have these responses, hence why trading is so difficult. At the end of the day, making and losing money is sort of an emotional experience for people, but finding a way to refine this is a personal journey that I think every trader kind of has to go on. For this is a simple practice that I like to do is if I'm going through a losing streak, let's say I take 2 losses in a day or something, I may choose to step away from the charts and do something physical, maybe work out, go on a run, do something off the charts to keep my mind away from it. Having these sorts of rule sets to protect yourself from yourself is critical to longevity in trading. And again, it goes back to also the risk management side of things. If something is completely dominating your emotions, there's a good chance that your position sizing is too big. And a quick little note on this, over my years of doing this, most of the stories that I have heard from interviews that I've done of all sorts of different walks of life of professional traders, what I've found over the years is that almost always the problem is position sizing. And again, if the trading that you're doing is causing you to be very highly emotional, there's a good chance that the reason it's doing that is because the position sizing that you've got is causing you to have that wild emotional swings because your account itself is probably swinging a bunch. So in my personal view, emotional trading and revenge trading goes right alongside with point number 3, which was risk management, right? Sizing your trades down not only is good for drawdown control, but it also is critical personally, I found, in reducing that emotional volatility that a trader endures. We're human beings at the end of the day. I know a lot of times you hear people say, oh, trade like a robot and all this good, on paper stuff. But in reality, we're human beings. We have psychology. We have emotional responses to being right or being wrong about something. But you can mute those and control those much easier if your position sizing is more under control. The final one in this list of 5 common mistakes is people often do not backtest. And backtesting is sort of like preparing for a test. And if you don't do any preparation for a difficult upcoming test, it's unlikely that you're going to pass the test. And this is what I mean by backtesting is traders fail to prepare, they fail to backtest, which ultimately is what builds robust trading plans, right? As we pointed out in point number 2 on this list, having a trading plan, just like a business plan, is critical for building out a successful trading journey. But at the same time, the way you get to having a trading plan that is thorough, robust, and kind of foolproof is from your backtesting, putting in hours upon hours in the charts, testing out strategies and concepts to see what does work and what does not work. Now, backtesting is a whole subject by itself, so I would encourage you to watch some of the videos that I've done on that subject on my channel, but make sure that you really take your backtesting seriously because 99% of traders that I've talked to do not actually do this one. So you may think you've done some backtesting, but I would challenge you to ask yourself, have you done at least 1,000 hours of backtesting? If the answer is no, that's like the bare minimum that I've seen in the profitable traders that I've worked with, spoken with, and interviewed over the years. 1,000 hours is minimum. So yes, this stuff is hard. Yes, this stuff is a lot of work. But if my channel is helping you along the way, I would appreciate if you could hit that subscribe button if you haven't already. And just in time, you're here for our bonus round. A bonus one on this list, a common trading mistake that traders fail to often recognize, is the importance of your trading costs. You want to make sure that whatever brokerage that you're using is giving you a good offer in terms of the trading costs that they offer to their users. Commissions, swaps, fees, all these sorts of things can seriously impact your trading. So remember to check out today's video sponsor if you'd like to explore more of their offers down below in the description. Thank you for watching and happy trading. I hope that video was helpful to you, and I also wanted to make sure to share our Telegram channel with you. Every day we are posting up chart markups and analysis and in-depth breakdowns of what's going on both fundamentally and technically in the markets. We also drop bonus videos in the Telegram channel, so don't miss out. Come join our Telegram channel. The link is in the description down below. Have a great rest of your day.